Hello, my friends. Thank you all for joining. It's Sunday. It's Q&A time. And this one is, as always, every Q&A on Sunday is different. People are asking different things. And this one, actually, I had to give a lot of thought to because I've been thinking about these answers since Friday. So let's get into it. This one's called Disruption Dominoes. Things you need to be aware of, what you need to rotate into, how you need to rotate, when, how you can save your family with some novel ideas, and so much more. Thank you, American Beijinger, Sean D, TND, K8, everybody else for being here. Appreciate you all. Oh, and a huge thank you to Doc Intern. Interesting. We'll get to that one as well. And Martello, thank you all for joining. Let's get into it. Today's story is a little bit spicy, but it's never financial advice. And a big thank you to everybody on Patreon that gives us all the questions every week. First question is from the Gravy Train. Hi, James. I'm hearing speculation that the 4-year cycle may be extended to 5 years and the top of the current bull run could be Q2 2026. What percentage chance do you give this? And in that scenario, what changes for you? This is so interesting. I think about this all the time. And if you asked me in January 2024, with the ETFs launching, I would have said a 20% chance of a longer cycle. Today, my math is different, and let me explain why. Many reasons. And I actually have a little table where I allocate probabilities and money flow to each to come up with a scientific percentage of the odds of us running long. But let me explain the reasoning why. And in fact, I wrote a paper last night on a potential for a supply crunch. Again, supply crunch. I know we've heard about this since 2017, but we'll find out Monday if there's something awry out there. But why I think we could go longer, a couple of things. One, we've had this steady grind higher now for a year and a half. We've had very low, historically low volatility for Bitcoin. Sell pressure is mostly gone. And what I mean by that is the whales and long-term holders have sold their allotment. In fact, they've sold more than they've ever sold in the history of Bitcoin bull runs, which tells me they're probably close to being exhausted. There'll always be sell pressure as the price goes up. More people will take lifestyle chips, but much of that sell pressure is gone compared to the amount of money that's flowing in. It's quite phenomenal. Now, I also believe big banks are going all in on crypto. Just late last week, we had Citibank, conservative institution, give insane price targets for Bitcoin. Absolutely insane. And they weren't talking about any bear market whatsoever. And we had JP Morgan as well, calling it the debasement trade with also very high price targets that I covered yesterday. Wild. So this is kind of making me more and more bullish. We've got treasuries and ETFs continue to pour in cash. Billions, literally every day. Last week alone, just the last 5 days, $3.25 billion into just 9 American ETFs. BlackRock nearly doing $1 billion of that in one day. Wild. And then real world assets moving on chain. The tokenization of everything is coming. And what I mean by that too, it's like, look at Solana, look at the plans of BUIDL and RWA and money market funds being tokenized, and everybody wants to be trading 24/7, and crypto will be the underpinning of that, which means the demand for crypto will be there, which means we may not get a bear. We'll see. And the supply crunch, check the paper yesterday. Just look up my Substack. You'll see it. It's free to read, of course. And fiat is imploding. Just look at gold as a canary in the mine. That's it. All these things tell me this could run along. Okay, I'm trying to find things that say, no, it's the same as last time and the time before that, but I can't. Now, that being said, if we do get an insane blow off top and an insane spike, I mean, we're going north of 165K, then that could trigger a bear market. Remember, if we go up really high, really fast, we'll fall really high, really fast. If we are the steady, slow grind upwards, there's no downside risk. Okay, so we're not going to fall off the mountaintop if we go up the slow path. But if we go up the little pinnacle that's very sharp, we could drop off. Now, back to your question. What are the odds we run to Q2 2026? My odds now have grown to 42%, everybody, which is pretty high. Not quite 50%, but very bullish nonetheless, as you see. So thank you for that question. Next question is from the Droopy. The first time Droopy has posted. As an NVIDIA employee with a large NVIDIA position, we know how well the NVIDIA employees have done. I've been rotating into Tesla shares vest, plus some energy plays. Tesla fits there too. Good job. Curious if you've done deep dives on what might come after these trends run their course. I'm aiming to buy small chunks now and over the next 5 years to build a big position. Current focus: AI chips, agentic AI, physical AI, chip manufacturing, energy, Bitcoin, SOL, but heavy on Tesla. No need to answer if you're covering this in an upcoming video. Your work is always incredible. Thank you for this. So first of all, I always think about what's coming later, what's coming in the future. But sometimes if you go out, try to predict what's going to come in 7 years or 6 years or 10 years, it gets really difficult. But being able to predict what will happen over the next 3 to 5 years is a lot easier. So because I think about exactly the situation you're in all the time, and I position myself early, and it sounds like you've done a great job doing that yourself, and rotating and diversifying into very few assets is good. But first, I do want to talk about a couple of things. The after. This whole stuff we're going through right now, the convergence of AI and hardware and demand and autonomy and agentic and physical AI, etc. It's wild. It's not just autonomy via FSD and robots via Optimus. All of this is huge, okay? The size. I made a whole video about TAMs. The TAMs of money, the TAMs of Bitcoin, the TAMs of AI, and the TAMs of Tesla, and allocated values to them based on multiples. Nothing comes close to the size of AI. And I remember people debating me in the comments, no, Bitcoin's bigger than AI. It's like, no, it's not. I just spent 40 minutes in a video proving it to you it's not, and people still debate me. It's like some people just can't be saved. But anyway, to repeat some of them very briefly, all right? TAM for Robotaxi. There's some fun stuff happening with Tesla as well coming next week, it appears. Transport automation. There will be autonomy everywhere by 2030, and that's going to be worth $13.6 trillion, which may not sound like a lot of money, but believe me, it's a lot. 8 trillion in drivers will be replaced, and the TAM will explode because now people will be able to get taxis everywhere for $1. If you're, say, in an old person's home and you don't have access, or you can't afford a taxi, but you want to go to the mall or something, or the stores or supermarket or pharmacy, now it'll open up that world to you. Or you want to send your kids to sports practice after school, but you don't trust them with another driver. Yeah, you'll pop them in a Robotaxi because you trust the robot more than you trust another human that you don't know, which is actually a reality because you see it all the time with Waymo in San Francisco. Kids in the back alone going to sports practice. Wild. Because they wouldn't trust them with an Uber driver. Now, that's just a Robotaxi. The other TAM that's actually massive is Humanoid, which will augment and replace the labor market. We're talking $60 trillion, more than 4 times the size of transportation, even after transportation explodes. And it'll enable 24/7 efficiency. And again, change everything. So people that couldn't, say, maybe afford personal chefs or gardeners or security guards or all that type of stuff. Again, it could be a lot bigger than $60 trillion. Everybody will want it. So the point I'm trying to make is there something bigger than humanoid and autonomy right now, looking out even 5 years or more? I don't see it yet, unless there is a massive breakthrough in things like living forever or curing every disease on the planet, which also ties into AI. That could be interesting, but I know that biotech is absolutely riskier than even crypto. So I hope that helps. Stay patient. I will be looking out for what's next. If there is something bigger than these two things, and the after, as I call it, the after AI. Again, nothing's bigger than transportation and humanoid robots until we get space. That is bigger, but that's a separate conversation anyway. We're not quite ready for that yet. When we get close to Mars or the moon, then we'll talk about that. So thank you for the question. Truby, next one is from DCA Junkie. I like this. I like the handle. I appreciate your time and content. I recently sold a property and have 185,000 to invest in Tesla. I currently utilize the DCAS model on Bitcoin, MicroStrategy, and SOL. If it were you, would you continue to DCAS or just purchase 185K outright of Tesla? Thanks from all your viewers in Australia. Thank you, Team Australia. So let's go look at the science behind DCA for DCA Junkie. First of all, let's look at the chart of Tesla and where we've come from. It's been I would call it a stacker's paradise. 4 years ago, I never thought I'd have the opportunity to buy Tesla at $106 or $150 or $220, et cetera, et cetera. It's been wild, but this is kind of where we've come from. And I included there a little bit of the ATR model. You can see we've come from level 4 and we're kind of close to level 6, between level 5 and 6. Level 6 is all-time high. We were in a big run last week, hit like 475. Now we're trading about 430, if I'm not mistaken, 420 to 430. I think if we get down, especially to that level there, the 380, 390, that would be a dream, but I wouldn't get greedy if we see $400. Definitely consider that as well. Let's look at DCA on steroids model, the buy profile. So the simple way to understand how this model works, it optimizes your buys. It helps you buy things when they are cheap or oversold. Even when they are moving up, you nibble. But when they've just experienced a massive pump, you wait for mean reversion. Okay, you do not buy on red ever. And that's the kind of weird thing about why it's dangerous. And that's why I also say part of my philosophy is don't chase, replace. Even if you know something is going to go to the moon, never buy after a massive pump because everything mean reverts 98% of the time. So if we look at where we are right now with the DCAS model, yes, if you use DCAS over the past year or so, 2 years, you would double your return on investment because those little green arrows are where you buy and the multiples you buy at. But once it goes in a run, it slows down the purchases. And you can see it's already beginning to mean revert. So we might see a little green pop up there. But if we do get a dip down to the low 400s, this is kind of weird to say because this is a stock that is going to change everything. And 2026 and 2027 are going to be wild. So can you afford not to be on the train? I don't know. So I always say deploy half, low 400, DCA the rest. We'll see. But I do think we're going to 500 before the end of the year, maybe higher. Now, the beauty of DCAS, it takes the thought process out. DCA during crashes brings about exponential results. You get to buy cheap. But if you can time and absolutely nail a for a low of a price. So for example, this is the S&P 500 going back 60 years. If you can nail those blue points, you beat DCA. That means you deploy lump sum at the bottoms. The problem we have now, we don't have the bottoms. But we might be having a similar type of bottom if you look out to the future, the next 5 years, because for the first time ever, we have a stock-based performance plan that's a roadmap to a 10x for the stock if Elon performs, and he will. Heaven forbid anything bad happens. So with that, it's a tricky one. Deploy half, low 400, not financial advice, and then DCA the rest, or find other assets that are equivalently oversold as well. Next question is from Jay Marsh. Greetings from Japan. Been watching for a year or so and wish I had sooner. I've hit my goals on Bitcoin, MicroStrategy, and SOL, but not yet on Tesla. Got to rotate hard in Q4. Thank you for changing my life as a 28-year-old with a young family. Congratulations for having a young family in Japan. Awesome. Here's my question. A while back, you said you would wait on Figma after the IPO hype. Cathie Wood and others have been buying this dip in recent weeks. Would you be interested in it now? Coffee's on me if you find yourself in Japan. That'd be nice. I used to spend a lot of time in Tokyo. I used to go there very frequently. But let's look at Figma. Okay, let's analyze where we are today after the IPO and fair value of Figma is $16. Current price is $53.04. That doesn't look good. It's 222.1% overvalued. Not good. Now let's look at who owns the bags, because it's post-IPO. What normally happens post-IPO, especially a company like Figma, that's heavy Silicon Valley VCs behind it, the VCs and their LPs, the limited partners, need to pull the money out after the IPO. They got to the IPO phase, which means they're doing really well. Now they have to start taking their profits and giving it back to their partners. They do not hold forever. The typical life of a fund is like 5 years, maybe 7. But if you look here, the VC PE firms, private equity firms, own 45.3% of this puppy. That's nearly half. General public, 32%. Individual insiders, 17%, who will also be selling. Private companies, 3.91%. And institutions, only 1%. The institutions are not touching this thing. They're not touching it, which is, for me, a little bit of a red flag. Cathie is, because she likes disruption. But I'm going to talk about something I've never spoken about before. But this is the disruption of disruption and how moats are destroyed in this age of AI, which applies to many different things too. So let's look at some of the good news regarding the financials. Revenue is supposed to grow 18% per year for the next 3 years, and they became profitable this year. This is good stuff. The bad stuff is the earnings are forecasted to decline by an average of 24.6% per year for the next 3 years, and that's not even taking into account potential disruption. That's not good. Yeah, revenue is growing, but margins are not. And that can be bad. Let's look at the chart. The chart for Figma, before I get to the juicy part, is down only during an AI revolution. That is disconcerting. Of course, the insiders and the PE firms have been selling as well. And that's just how it rolls after an IPO. You take your lifestyle chips off the table and you pay back your LPs. No surprises there. But I want to talk about the bigger story, the bigger elephant in the room. And this is what I call domino disruption. First time I've ever coined the phrase. But you have your different companies. So Figma was disrupting Adobe. Adobe tried to buy it. They offered way too much. And then I think the whatever groups that say it's bad for competition said they couldn't acquire them, so they didn't. But if you look at the difference in how Figma disrupted Adobe, they were cloud native. They enable real-time collaboration across a whole bunch of different creators. A very, very lean operation. It was very simple and easy to use compared to the Creative Suite from Adobe. It was also helped with the democratization of creativity. It meant non-designers, people that didn't go to school for 5 years to learn how to use Photoshop, etc., could now do it using Figma. And we have a team that uses Figma too to design our new product that's coming hopefully at the end of this month. And there is a whole ecosystem shift. Adobe lost a lot of creators to Figma. And that's why Adobe said, uh-oh, we're losing our customers. Let's go try buy Figma. And then it failed. I think the offer was 20 billion. They ended up IPOing for more than that. But this is where it gets really interesting, at least as far as I'm concerned. You have an incumbent player called Adobe, the 800-pound gorilla in the room, gets disrupted by this little startup, by some university dropout genius kid who set it up. And then what happens to Figma? This. Okay, Nano Banana from Gemini 2.5 from Google is now allegedly disrupting Figma, because now you don't need any skills or design skills. You just talk to the computer. You ask it for what you want. AI will co-create with you after what you describe exactly what you're looking for. It's way faster than Figma because speed matters in everything in life. It enables mass creativity. Anybody can become a professional level designer. And I know the designers will say, no, they can't. No, I'm a designer and I'm the best and no AI can do what I know that. Of course, you are the best. The point is AI can spin up something in a fraction of the time that a professional can. And it might be 95 or 98% as good as what you could do. But the point is, it can help people move and operate faster and much more at scale. So no offense to the designers out there. But the cool thing that I really find powerful too is The Google ecosystem advantage built into docs, slides, search, etc., is pulling users away from standalone tools like Figma. Again, don't fade the power of the Google ecosystem and the reach and the capability of all that they have, especially for the creatives. It's quite powerful. So the point I'm trying to make here is, would I invest in Figma? The answer is no. Let me tell you why. Because AI removes moats. There's a little nano banana image I asked for, is how AI is dispelling brains and how you've got a very big moat for an incumbent that's disrupted not once but twice. Adobe's been disrupted. Now Figma's been disrupted by AI. And Figma was AI. But now AI is moving so fast, everything can be disrupted. And that's what you need to understand. So when you talk about moats, you have to be sure that you have a moat like a coherent compute moat, a manufacturing at scale moat, an AI moat, a data moat, things that are not easy to replicate. They are the indestructible moats you need. But if it's just something like Creative Suite, yeah, you're going to be disrupted. So that's the double domino of disruption that you all need to be aware of. So looking at the chart, by the way, it could bounce. It could do well. Is it too risky for me? Is it too overvalued? Does the financials suck? Yes, yes, yes. So I wouldn't touch it. Hope that helps. Thank you for the question. Crypto Explorer, thanks for all you do. Do you think Nvidia and Baba, that's Alibaba, currently work as inversely correlated assets for pair trading? It seems that Baba is benefiting from US restrictions on Nvidia sales in China, and I've seen charts go polar opposite intraday on some news, and they do seem to both be trending up overall. Also, I know you must be enjoying their share price being identical at times, obviously different market caps. Yeah, that's always fun when things are gravitate to being the same, whether it's $10 or $100 or $300. It's kind of fun to pair trade. Let's look at some quant first. This is the correlation of Nvidia and Baba. Nvidia is at the top chart. Baba is the bottom. It shows you when they are correlated, basically the top half of that line, and when they are not. Literally, this is a crapshoot. You don't know which way it's going to go any time of the day. So the correlation here fluctuates massively between being correlated somewhat. We had a 3-month correlation of 0.45 to 0.51. That's positive, not inverse relationship. Historically, Nvidia surged in AI hype while Baba fell. Chinese stocks were out of favor last year, etc. So there is no inverse correlation here at all. No persistent inverse behavior. And if you are pair trading, you do need that, or else you're going to lose. So that's the bad news. But if you want to pair trade things, there's 2 ways in which you can do it. And that's it. Everything is a pair, if you ask me. That's why I've built tools around that. One is pair trading in steroids. And this is how you win with inverse correlated assets. A short list of just hundreds and hundreds that we have, and the probabilities of winning on the time frame and the settings. And you go, for example, you go long Dow Jones short, QQQ short, Tesla, you name it, gold miners. They've got plus and minus, Solana, Bitcoin, whatever you want. You have all the pairs here. That's one way. There's also another way, because I like kind of the way you're thinking more in a macro space. And this is probably the least understood model that we have ever created. And nobody uses it because nobody understands it. But I know the way you are thinking, you might actually enjoy it. It's a really cool model. But the idea was to trade related assets, but in a different way. For example, it could be the price of oil versus the price of oil refiners like Chevron, or gas station companies like Exxon. It's a cool tool that helps you understand when one is overvalued versus the other. Or you could trade oil producers versus airlines. If the price of oil goes up, the price of airline stocks goes down, et cetera, et cetera. So have a play with that. That's a good one too. Thank you for the question. And next is from Gray Pugh. Hope I got that right. Hi, team. Will X create its own blockchain or use the best chain like Solana or peg to Bitcoin? Very good question. I think a lot about this, and we don't have many answers. We don't know what X is going to do, but they have a thing called X Money that they are planning to launch this year. It'll focus on things like being an everything app. You can do your social, you do your payments and your trading and your investing and all that type of stuff. Is coming, but we don't know what it's going to do or how it's going to operate. First of all, nothing is known. They're very tight-lipped on this one. There will be probably a fiat-based payment. Initially, they'll crawl before they walk and run. They already have licenses in about 38 different US states, but it's not global. There could be crypto integration. We don't know what it's going to look like. There's no confirmation of any native X blockchain. There's potential for using existing networks like Solana for speed and low fees, or Bitcoin for tokenized assets. We don't know at all what's going to happen. And this brings me to a bigger thought that I've had for a lot is, what is Wall Street going to do? Are Wall Street going to build their own blockchains and have hundreds of validators or just one sequencer? You know, some might, or they might use the layer 2 on ETH or whatever, or they might use an existing blockchain. So we don't know exactly how the world is going to go. If they don't want that full control, they may have to build their own or create their own version like Base did with Coinbase. So we'll see. Either way, it'll be fun and exciting to see. Next question is from Johnny Conqueroo. During last week's Q&A, you briefly mentioned buying a franchise. Capital preservation is very important, and I'm dying to know your thoughts on franchises. Would you please expand on that for the community? Thank you for the invaluable content. I'll be a Patreon subscriber for life. Oh, that's brilliant. And a lot of the things that I say are from experiences of my life and people I've met who've been very successful, and I study why they've been successful. This whole franchise thing stuck with me way back when. This is a little image I put together, actually using Nano Banana. And part of the struggle is, I know right now, well, let's go back in time. First of all, it was mid-1995, and I met this guy in the East Coast. He's in Washington, D.C., and he actually had told me a story. He's like very wealthy, but came from nothing. So if you go back to 1989, guy had literally nothing, almost coming out of school. He got some money from his family, bought his first McDonald's franchise. Then he made that very successful over 18 to 24 months, had enough cash flow from that to be able to borrow from the bank to buy a second McDonald's franchise. And within 5 years, he had 3 of them and was making millions and millions of. I was like, how can somebody make so much money from such bad food? I didn't understand it. And we were going through the numbers. I was mind blown. 3, gone from 0 to multimillionaire in just 5 years. And they're buying little McDonald's franchises in the absolute worst parts of the city you can imagine. 2 of the stores, they served food through bulletproof glass 24/7. And this is in the early 90s. This is nowhere near like the dangerous times we have right now. Completely crazy. Since then, it always stuck with me. Franchises are very powerful. Now, there's another angle to this as well. With AI and disruption and all the crazy stuff that's happening, people are trying to find ways. What do they do with their kids? Do they spend $250,000 on education, or do they buy a franchise with the money and set up a business where the family can make a lot of money for themselves and incentivize everybody to go forward? So it's kind of like my little multi-generational image here. It would be great for a family to set up a family business that everybody can participate in, that doesn't have another career going on at the time, or is thinking about not going to college instead. Get the kids involved, make sure they're properly incentivized. If their goals are aligned between the family and the business, the franchise itself, everybody could do really, really well. You know, I know people that have yogurt franchises. Down in LA, one of the Cyber Bulls has a whole bunch of yogurt franchises and things like that. So they can really, really work well. Now, people think a franchise is like a McDonald's or something else. No, it can be whatever you like. And a lot of the US is completely franchised. So I'll give you some examples of ones that are available and how much they typically cost to set up. One is Kona Ice, a very low overhead, very high margin. That's the same thing with like pizza franchises and stuff. You got UPS stores for business services like mailing packages and notary services, cost about $150K, also in high demand. But make sure if you're setting any one of these things up, make sure you have a need in a place where there isn't one across the road or a few blocks away. You want to own that market yourself and make sure you're not setting something up where there's competition. ServPro does restoration services. Because I manage a lot of real estate, I'm very familiar with this. Things like floods and carpet damage and smoke damage and stuff like that. Yeah, it's also recession resistant. When you need ServPro, you need them fast, and typically it's like on a Sunday or something. So that's another good one, especially if you're handy or if you have somebody in your family who's handy. Pizza there, great clips for haircuts. Visiting angels, this is really, really cool one. Great demand for that is helping aging population go by, check on them, bring them groceries, make sure they're getting their medicine so they can still be independent but have a little bit of help. If you're busy 9 to 5, it's a cool one. Zoom and Groomin, also pet services, mobile pet services is massive. A lot of people don't want to take their loved one, their puppy or whatever, to a place, or they don't want the anxiety of the animal in these places. So they have people come to their house and do it there. And then finally, True Blue home services, property maintenance, repairs, sinks, lockouts, all that stuff. Pick something you like or your family likes or enjoys that fits what you love doing. Whatever it may be. It might be pets, it might be pizza, it might be shaved ice, it might be yogurt, it might be notary services. And it's a great way to get the whole family involved, make some money, and have that perpetual revenue stream coming as well. With that, helping animals this week, we are donating to the Wild Salmon Center to help support and protect salmon against all the crazy stuff that's happening to their rivers and bacteria and all that, to help them thrive in the wild as well. Tomorrow morning, DCA Live, Mando is back from his travels. It's going to be a fun one. And I hope everybody got smart. I'm going to do some live questions right now as well. And thank you all for coming. This one is from Doc Intern. Hi, I'm moving my 401k to an IRA that allows options. Woohoo! Thinking to allocate 50% Tesla, 40% MicroStrategy, both 1/3 leaps and 2/3 equity. The remaining 10% Nvidia, Google, UPXI, etc. Any NFA and allocations? Should I do SLs and on which stocks? So if you are in an IRA, it depends. If you're in things like, I don't know, I think it's a SEP IRA has limitations on margin. I'm not really a retirement account expert, but sounds like you will be able to do synthetic longs. I know Sanjay does them in a retirement account as well. I would be very careful buying MicroStrategy here. I know Bitcoin is looking really good. Last night we hit a new all-time high. Bitcoin's just shy of 123K. If we get the supply crunch and people can't find Bitcoin, in my paper yesterday I wrote that would turn MicroStrategy into the on-ramp to get access to Bitcoin, which is what made it famous in the first place. So, but I would be very careful in allocations. I'd also be careful here at the price of things and how much they've run. I get very nervous after things have doubled in the space of 3 or 4 months. I do like Google, but that's also run. UPXI is undervalued. But definitely dabble in some of the SOL proxies. I think the Solana is completely undervalued compared to Ethereum, radically undervalued, and the ETFs are coming. And a lot of big news is coming as well regarding that chain. It's still dominant. But yeah, get some, I still hope for another bite at the low $400 Tesla Apple. Be ready for that. And I think if you're doing I think the leap options are coming out as well. The expiry will be moving to 2028. Think about some of those too. But remember, if you are buying a leap, make sure you buy it at a time that's not volatile. If the price is going like this, the price of the leap will be very high and you'd be better off just buying the stock. So I hope that helps. Let me know as well. Ping me if there is margin in that IRA account too. What's your favorite pair trade at the moment? Joe Biden's daycare. It's funny. I shouldn't really say this, but you asked me the question, you're going to get the straight answer. I am perping long and short the pair of Hype and Aster. So don't do it at home, kids. It's really tricky. But and there, the Aster stuff is very manipulated. But that's my favorite pair trade at the moment right now as well. Red Hat, schöne Grüße aus Berlin. American living and working in Berlin. Should I invest my euro directly in German investing account or send to US for Robinhood? I don't know. I like the features and functionality of Robinhood. You can do lots of options and covered calls, really good trading. You can do pre-market and after-hour trading. You won't get all those goodies with the German investment account. I would move your money to Robinhood. Hope that helps. Robinhood is really fun to trade on. I really like it. Brayman, I've got 456 Tesla shares. Woohoo! You made over 300 Tesla. Well done. Life-changing. 218 SOL, 0.59 Bitcoin. I have a castle. I also have 100,000 pounds in a pension, which I can't touch. I'm 52, married, no kids. Any suggestions, really? I like where you are. Let me see. I always equate 1 Bitcoin to about 300 Tesla shares. So you would technically be underweight Bitcoin. If Solana goes on a rampage, which I think is very underweight, but if we see like 450 Solana, maybe take some off, move to stable coins, wait for, again, there's a 60% chance the bull run will be over before the end of the year. If that's the case, take profits, sit on stables and wait, and then layer in as the price of things like Bitcoin falls. And that would be kind of my plan. I like what you have, and I don't know what you can invest your 100,000 pounds in your pension in, but hopefully you can invest in something and not just fiat. That would be great. But yeah, you are well set. Stay healthy and wait and try get to that whole Bitcoin. Hold on to the Tesla shares and keep on DCAing in there as well. Thank you for your super sticker, Martello45, Pancake Panda, Vagabond, and Silva Muster. Appreciate everybody for coming. And I hope I didn't miss anybody. I think I got every Mr. Burns there too, and Signal 103 and Angle Blackson. And I appreciate you all. Thank you all for coming. Happy Sunday. See you all first thing tomorrow morning on DCA. Good night. Let's check the market, see if anything is pumping wild. Easy. We got to wait for China to wake up before Bitcoin pumps again. And then tomorrow morning, I'll be watching the markets to see if BlackRock were able to fill their bags and buy the 7,200 Bitcoin, or if there is actually a rumored supply crunch happening. We'll see. Either way, it's going to be fun. Thank you all.